Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good evening everybody. Welcome to another edition of the AccessATrader.com weekend update show. It is around 6 o'clock, quarter after 6, Friday night. The market's been closed for about 2 hours. I feel I have to knock out the weekend update tonight or else I have a crazy weekend. So not in a single guy sort of way, kind of a parent sort of way. But you guys know with kids, they always come first. Hopefully you guys are doing well. If you are an avid viewer of this channel or found this for the first time, or you're getting value, or you kind of like what I'm saying, or you don't like what I'm saying, you just like to hear my silly little voice and my point of view about the tape. Anyway, guys, take a second out, click a like on the video, share, subscribe, and come aboard if you have not done so already. So let's talk about it, right? Let's talk about the tape. So we lost the 50-day moving average 5 days ago, right? If you were a viewer of this channel for a number of years, you knew what was going to happen, right? Everybody knew what was going to happen. The newer trader or the person who doesn't believe in technical analysis sat there, rolled their eyes and like, yeah, whatever, right? The 50-day moving average. NASDAQ lost the Qs lost the 50-day moving average approximately 4 days ago at 523. We went down to 496, right? This is day 5 underneath the 50-day moving average. And as you saw with the individual equities and individual stocks losing their 50-day as well, it gets pretty ugly very, very quickly. And it kind of shows you the whole theory. You take the stairs up and the elevator down. And when you have a market that is euphoric, right? Euphoric, and people are chasing, you have more market participation, you have much more liquidity because people want to be in the market. When you have a market that is, well, going back, right, reversing, retreating, whatever the case may be, you have less participation, you have less liquidity, and this is why stocks go down a lot faster than they go up. The year started out very, very aggressively. You had the Trump second presidency term kicking in. You had a big run up for about a month, and then the market realized, well, we can't go up forever. And again, by no stretch of the imagination have we ever talked about that was the market highs and that's it. You'll never see it again. Again, if you're just a casual viewer of this channel, you kind of know I don't know what's going to happen on Monday. Okay, I don't know what's going to happen on Tuesday. I sure as hell don't know what's going to happen 3 weeks from now. I just prepare for the next day. And once we lost the 50-day moving average, and you have all these different uncertainties. Again, you have this whole fiasco still going on with this Ukraine war. Zelensky apparently got kicked out of the White House today by Trump. I don't know, right? Whatever to believe, but you have the whole tariffs, right? Tariff cannot be a good conversation point for the economy. Again, everything costs of everything rises. You have China, you have tariffs, you have Doge, whatever the hell they're doing. You have very, very lackluster earnings, right? And somebody asked me the other day, like, hey, Dan, like, why is this market coming down? Is there news? I see the news. Is it really that detrimental of the news? Guys, remember, for the last 2 years, okay, we were up nearly 60% on the QQQs. Again, I think I've kind of went through this several times. But the point is the market doesn't need a reason. It's just a cycle, right? When you have a big run up in equities, especially for a 2-year cycle, again, we talked about this. Remember the touchdown regression? You're going to have a little bit of a challenging year because it's not as good as the 2 years preceding going up 25, 30, maybe even 40%. So this is a normal cycle. I don't believe the new cycle is as significant as what we saw, for example, during the mortgage crisis or after 9/11 or even the 2022 bear cycle. And that's exactly what it was. Remember, the Qs were down 35%, but the market really does not need any reason to go down. Gravity is the reason, right? Profit taking is a reason. Regression is a reason. But I think for all you guys who've been with me for a very, very long time, you kind of get it, man. You kind of get it now that, we don't need a bull market. I want a bull market. I love a bull market. I love the euphoria. I love people chasing. I love the overnights. But as you've seen just in the last, even 5 day sample size, man, it's pretty damn good on the way down. And, stock prices have been absolutely getting annihilated. One's big levels have gotten confirmed. If you've been watching, the Tesla short has been absolutely amazing. But today we did something different. We'll talk about that in a second. But overall, you look at the numbers and you look kind of at all the tallies today. You got some pretty, deeming numbers. You got Bitcoin, that I talked about for the last 4 or 5 days. Hey, watch that 89, 90 level. Bitcoin cracked 80,000 last night. Went down to like 79,000 and change. So that, again, that's still building below supply. You have at one point the market, the NASDAQ dipped 8%, man. 8%. It's a lot, man. It's a lot. The S&P finished the week some 4% off the highs. It doesn't sound scary because it's not scary. The S&P and the Dow have actually held up pretty well. It's the NASDAQ. NASDAQ went down another 3.5% this week. And again, the mega cap technology names, even the high flyers, even the names that went bananas, the Affirms and the UPSTs, all those names, they're coming down. They're coming down aggressively. So let's talk about it, right? Let's talk about it. So we all know now, again, now we're getting definitive lines in the sand everywhere, right? And we always talk about no matter how bad a market is, there's two things you don't do. Number one, you don't buy gap ups. You guys remember what happened when the market gapped up in the first 4 days of this week? What happened, right? People got stuffed into supply. I've been beating this point home through every video, through every tweet, like 20 times a day for people that understand. Guys, stop buying gap ups into supply. Again, this is not the first time you heard me say this week. This is like 4 videos in a row because the same thing happens. You keep on buying into supply where stocks broke down, and all you're doing is providing liquidity for people who are getting out. It is called emotional buyers, which are people buying the gap ups versus technical sellers into supply. So that's the first rule. I think you guys have figured that out. I think you guys have seen it visually now 4 out of the last 5 days. Also, what you don't do, right? What you absolutely don't do is keep on calling a bottom, right? Here's a bottom. If people have been calling a bottom for the last 2 weeks, guys, why? Why are you doing it? And why are you buying calls? You buy calls above supply. You don't buy calls below supply, below demand. It makes no sense. 95% of your premium is going to go bye-bye unless you get really, really, really lucky. Again, you don't buy stocks until they get above the previous day's range. Again, we're not even talking about reclaiming back the 50-day moving average. So you have to be very, very, you have to kind of be aware of what's going on, folks. Again, people, all you hear is, I'm buying the dip. I'm buying the dip. People have been buying the dip now for the last 7 days. The NASDAQ literally has gone from 539 to 496. I mean, that's a lot of pain. And this is your line in the sand, man. This is really a line in the sand. Your next definitive level is this 497 level. I know we got a nice bounce today. And again, bounces come all the time in sell cycles. And that's where we are right now. And somebody asked me, do I think today's the bottom? No. Why would you think today's the bottom? Think about this. Let's flip it in reverse from common sense point of view. Right? If the market reclaimed the 50-day moving average this week and we went up 4 days in a row and the 5th day we went down, would you say that was the top? Right? The answer is no. So why would you think this is the bottom? This is the complete opposite, right? We went down aggressively 5 days in a row, and finally on the 6th day, you caught a little bit of a relief, right? We got some data come out, caught a little bit of relief. So again, folks, until we get back above the 50-day moving average, you're wasting your time. You're basically telling the world you're a novice. Keep on talking about bottoms and bottoms. Eventually you'll be right? Eventually you will catch a bottom. But again, who cares, right? Who cares? It's price action, trade your process, whatever your process is. But the word bottom is as useless as tits on a bull. Again, unless that's your thing. So we have a very definitive line in the sand going into next week. 497 was basically today's low. Any close below 497 starts going all the way back down to this 491 area. And the problem is going to this 491 level, if that's the case. And again, we're not, anywhere near that right now. Just giving you guys kind of a heads up. If we get any close below 491, takes out this whole weekly trend line. That's not what you want to do. And then next thing you know, this little sell-off that we've had is going to feel like a day at the beach if we ever close below this trend line. We don't want that. I don't want that. Okay. I don't want to, I don't want to be in a situation that every single day you're trying to find tighter and tighter setups on the downside. And eventually, the further a stock is away from its breakdown level, it's higher probability it's going to rally. So going into next week, again, be very mindful of where we are. Watch the stocks that are in the middle of their ranges or about to break down. Stocks not resting to go, to go higher. They're resting to go lower until deemed otherwise above the 50-day moving average. So let's talk about today's pivots, right? Let's talk about today's pivots. This was a massive one. This was an absolute massive one. Tesla has been, since it lost its 50-day moving average, okay? Which, by the way, somebody told me it was irrelevant. Okay, cool. So Tesla lost about 100 points in the last, 40 days, right? Lost about 100 points. And finally, we had a definitive line in the sand here. And, the 50-day moving average, as everybody knows watching this broadcast, is, let's call it your father, right? Your father loves you. He'll defend you, right? That's your guy. The 200-day moving average is your mother, right? As much as you love your father and as much as, you have a great relationship with your father, there's nothing like your mom's warm, right? Your warm hugs, her love. You are in her. She pushed you out, right? So you have a different relationship. So if you think the 50-day moving average is a big deal, well, the 200-day moving average is the 50-day moving average on steroids. So here was my notes. Here was our game plan, man. Here is our game plan. 278 is the 200-day moving average. Could be a short-term tradable bottom. If you noticed, I used the word tradable. It's not a bottom. It's a tradable bottom if it holds. It's a massive area, and that's why it's a 5-star trade. So my point was, here's the 200-day. If we would have lost the 200-day today and closed below, I don't even want to tell you where the next level of support is. But that was the play. We reclaimed back the 278 level. The stock had an initial push to like 293 before it kind of reversed course and kind of stabilized towards the end of the day. Guys, I give you my word. This was not the bottom on any single stock today, okay? If it is, that would be wonderful. I just don't think it is, okay? We didn't see the capitulation bottom. We didn't see any massive levels being confirmed. Technically today, I think this was just a relief rally. That's all it was. It was a relief move, great move on Tesla off the 200-day moving average. But now we have a definitive line in the sand. Again, can this relief bounce maybe have another day or so? Sure, absolutely. We see this all the time. But again, you don't want to use the word bottom. Here is a definitive, right? You see today's lows, right? You see today's lows. Well, that's the line in the sand, man, okay? If you look at the weekly chart on Tesla, folks, this is a major, major line in the sand. Because if we start losing today's channels next week or the week after, guys, we go all the way down to 250, okay? We go all the way down to 250 and start filling in this whole area here, right? You see that lows here? Maybe not even 250, 240, right? We start filling in this whole gap here. So we have a very, very big definitive line in the sand on Tesla. Again, is it possible it takes out another day's channel and gives us a run back to the 5-day, 10-day moving average? Maybe, right? Maybe. But again, we definitely have a definitive line in the sand. So great bounce, fantastic bounce. This is literally my only trade of the day today. A-Lab got smoked at the open. 74.80 if it builds below can flush. Here was A-Lab. I think Tesla, the long side of Tesla today was probably, I think I've only taken like 3 long trades the whole month. I think probably, no, excuse me, maybe 4. I had Microsoft and I had a Microsoft overnighter. Everything else was basically Tesla bounces. So it really shows you. A-Lab got smacked today, took out the 74.80, traded all the way down to 70. Nice move on A-Lab. Amazon does not look good, man. It does not look good. They had their event The Alexa event, 208.37 for builds below can flush more. Not a big flush, but again, Amazon has gotten really, really beaten up. It took out the previous day's channel, traded down about $1.50. Watch this 207 level going into next week. This thing starts losing 207, should get down to the February lows of 204 before big levels are being tested on the 200-day moving average, such as we saw with Tesla today. Q's got hit really, really aggressively. 500 is the 150-day support. If it builds below, can flush. Q's went down $3 off that pivot, man. It was a big, big move down. It took out the 500, traded all the way down to this 97 level. That is, guys, the line in the sand going into next week, 497 on the QQQ. So, nice move there. Congrats for all you guys who caught that as well. And I believe that's it, right? I believe that is it. Yeah, I mean, I only traded Tesla today. That's all you needed. That's all you needed. Tesla had a big, big move at the open. For all you guys who traded it, you kind of know it was touch and go there for a while. They went up $1, then came back in. They went up $1 and then came down $1. Way up $2, came back in. I was like, so a little bit, and then it finally took off. But again, I've always said this all the time. If you don't bounce the 200-day moving average, you should never take a bounce on anything, because if you're not comfortable with the mother of all supports, then you will never, ever catch another support band again. NVIDIA, again, good earnings, not good enough. Major sell-off, major sell-off off earnings. Traded down to the 16 level today. That's going to be a line in the sand going in for next week. PLTR got smoked, right? Got smoked today off the 50-day moving average, traded all the way down to 70. So again, this is my point about all these high flyers. They're just getting really, really aggressively pulled. As much as Meta had this massive run up, look at the, again, as soon as it lost the 5, the 10, the 20, it got smoked as well. Folks, you look at this line in the sand, the 50-day moving average for next week. Right, guys, watch Meta for next week. This thing starts losing the February lows. Folks, there's like 30, 40 points, assuming if the market doesn't hold up as well. So that looks like pretty much like everything else. Microsoft continues to die an ugly death. AMD, somebody 3 weeks ago said, when the stock was like at 115, they said, wait a minute, you're going to short the lows? Ha, 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 ha. No way, no way it goes below 115. The stock's at $99. So yeah, stocks never go lower when they take out the lows of the day. They never go lower when they take out weekly lows, right? They never go lower. Anyway, guys, have a great weekend, everybody. God bless. Again, always remember, folks, when you get into this business, you have two choices. You could be an investor, you could be a trader, but if you are an investor, be an investor all the way. If you're going to be a trader, trade both sides of the market. Again, God gave you two hands. They gave you 2 ears and 2 eyes. Trade both sides. Guys, God bless everybody. Hope everybody's doing well. And with God's help, I'll see you all in the field on Monday.